Excel accounting practice problem. Invoice created from check created from purchase order. Get ready because we're going to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now entering transactions into it. If you have access to it, there's going to be two tabs down below, the example tab and the practice tab. Practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. We're going to be entering transactions that will be related to an invoice, or the journal entries that would be related to an invoice entered into accounting software, typically as we make sales, including inventory and sales tax on account, not receiving cash at the point of sales, in other words, but increasing the accounts receivable. As we do this, we also want to think about the process of being able to track the information as we order the inventory, possibly on for a specific customer, in this case, guitars. We can imagine a situation where the customer requests guitars. We don't have them. Therefore, we go to our vendor and create a purchase order which in this system, as we are only recording accounting transactions, we don't have the supporting documentation for it or any transaction related to it, because no transaction happens with the purchase order. It's just a request of inventory from the vendor. Then when we receive it, we then record the inventory on the books, and then now we're going to turn around and sell it to the customer who requested it. Now, when we look at it here, we're just going to be entering the transactions, but you can imagine that in an accounting system such as a QuickBooks, you could, for example, try to tie the customer all the way from the purchase order, even though the purchase order doesn't really have anything to do with a specific customer with regard to the purchasing of the guitar, meaning that information doesn't matter to the vendor who's going to give us the guitar. But if we could put that into the purchase order and tie it out to then the bill or the check that we would use to pay for the inventory once we receive it into our warehouse, and tie the purchase order to the bill or the check, and then tag along to that the fact that the invoice is going to be generated with the use of the customer, meaning we're keeping the customer that along with these documentations. And now we're going to turn around to the sales side of things and take that inventory that we have now received and sell it to the customer with the use of an invoice to record the transactions. So going back to our tab on the practice tab in Excel, it's going to be basically the same kind of journal entry, but you can imagine how you can do that added step in linking that documentation using forms, purchase order to bill or check to the invoice, tracking the customer all the way through if you have the database program to do that. We're going to start out by cleaning out the worksheet here. So we're going to put our cursor on the skinny item. So we're on the skinny item here. We're going to go all the way to the left to A. And then we're going to right click and hide those items. Then we're going to take the ending balances and put those into our beginning balances. So we'll select the ending balances, Control C or copy, putting those on the beginning, but we're going to paste them 1, 2, 3 values only, and then delete the transactions in the middle column so that we can just look at those transactions we're working on here. Then we have the GL as well to give us the detail for the entire month. So we're going to then be creating a transaction related to the invoice. So let's first think about the accounts that will be impacted, and then we'll go take a look at the actual inventory items on the subledger. So this is going to happen on 1/23. The accounts impacted for an invoice, in essence, meaning sale of goods and services, in our case, guitars, on account, means we're going to be increasing accounts receivable. I'm not going to put the numbers in yet. I'm just going to put the accounts. We know that sales tax is going to be impacted. So that's going to be a liability that we're going to have to pay to the government. So we're not going to pay it yet, but we're going to collect on it. And then we also know that sales, the revenue account, is going to increase. These two bottom ones, those are going to be credits. I'm going to indicate with an indentation on the alignment area. Then we're also going to have the fact that we're going to have cost of goods sold, and the inventory is going to be going down. Inventory decrease, and alignment and indent the inventory. So there's going to be our transactions. So now we want to think about, what the dollar amounts will be. We'll first think about the dollar amounts in terms of the cost, meaning cost of goods sold and the inventory. We're going to do that all the way to the right in the sub ledger. So I'm going to go all the way to the right here till we get to the sub ledge. And we're going to sell another ELP. So I'm going to be in the next available row down here on 123. And we're going to sell 50 of those, 50 ELPs. That's a lot of guitars. At the $400, at the 450 times the 400, that's going to be the 20,000. What's going to happen to ending inventory? We're going to decrease it by 50. They cost 400. 50 times 400, there's the 20,000 we had before. 55 guitars minus the 50 guitars means we got 5 left at 400. The 5 times the 400 is going to be the 2,000, 2,000. We also sold, what else did we sold? We sold the EPSHs. So where are those? The EPSHs down here, type of guitar. And this is going to be next available column on 123. We sold then 10 of those, we're going to say, at 320 with this invoice. This is going to be 10 times 320 for the 3,200. What happens to the ending inventory? The same 10 decrease times the 320. 10 times 320, giving us the 3,200. We had 15 units minus the 10 units, gives us 5 units left at 320. This being the cost, not the sales price, by the way. 5 times 320 is going to be the 1,600. So that means then that we're going to be out of balance up top by the difference, which is the 23,000, which is, I'm going to hold down control to do this. There's the 20,000. I'm going to scroll over here, and then I'm going to hold down control when I pick up the second one that we just did, hold in control, that one. 23,200, 23,200. That's what our journal entry needs to be for the inventory side of things. Let's do that, going all the way back to the right to enter the transaction. Scrolling down, I'm going to put it into the cost of goods sold area, and I'm going to do the same kind of thing, tying it out to the sub ledger so that we can see where it comes from. You don't have to do this one. You could just put that number in there, hard code it. But this will give you a little bit more detail to see where everything is being pulled from. Here it's the 20,000 plus. Then down here on the EPSH, the 3,200, that should bring us up to that 23,002. Then the inventory is negative of that amount. So we've got the 23,002 there. Now the sales price is not necessarily tied to the subledger tracking the cost, but it might be a standard markup. We're just going to be adding up the sales price. So the sales price is going to be, we're going to say then, I'm going to put brackets around, I'm going to say negative and then brackets, and we're going to imagine those 50 units were multiplied times $500. That's the sales price, 500 times those 50 units we sold, plus the 10 units times the 400, we're selling those for $400. Therefore, our sales price will be total 29,000. That's the amount that would show up on the actual invoice, plus the sales tax, which we're imagining to be 5%, a usage tax, that tax being different from state and locale to state and locale. In the United States, a usage tax, so same concept in other countries of a usage tax. We're going to take the 29,000 times 0.05. That gives us the 1,400. That means we need to be receiving from the customer and collecting at some point in the future the negative sum or plug formula of these items. That's going to give us the 30,450. All right, so let's go ahead and record this out. We got the AR, accounts receivable, the R. And so we're going to go up and we're in cell W6 equals that accounts receivable 30,450, going from 8222 by the 30,450 to the 38,672. Then the sales tax payable is the next item down here in W14 equals that 1,450, increase in the 505 in the credit direction by the 1,450 to the 1,955. Then the sales down here on the income side of things is going to be in the sales side, increasing in the credit direction by the 29,000, bringing it up to the 39,107, increase in the net income, increase in net income because these are not a negative number in the sense of a negative or loss, but a credit to the 36,222 down here. And then we'll also record the cost of goods sold, which is going to be the expense side of things. So the expense of us consuming the inventory, bringing then the net change to the 5,800, and then the inventory up top in W7 equaling the 23,200. So now we've got the 38,878 minus the 23,200 to the 15,672. Okay, so then is that what it was? To the inventory is going to the 15,678. Now let's post it to the GL. So we got the accounts receivable going out to the general ledger. Accounts receivable, third account on the trial balance, therefore third account on the GL as well. So I'm going to be here on 123. And now we're in AI 10, left to the wall and down to the 30,450 and enter. So that then brings us up from the 8222 by the 30,450 to the 38,672. So here we are at the 38,672 and we're out of balance by the 30,450. So then the next item is going to be the sales tax payable. Sales tax payable is going to be here. It's the last liability account. So we've got the assets, we've got the liabilities. The last liability account is going to be here. This is going to be 123. And so now we're in the AY8 equals left to the wall, down then to the sales tax payable, the 1450, and enter. So now we had the 505 up by the 1450 to the 1955. That 1955 is going to also be on the trial balance. The 1955 still out of balance up top in the GL by the 29,000. So now we'll record the last one to the sales. So here's the sales first income statement account. So we have assets, we have liabilities, we've got the equity income statement account in the sales. We're looking at 123, and then at BG8 equals left to the wall, down then to the sales of the 29,000 and enter. So you can see then this solid increase only going in one direction. We were at the 10,107 up by the 29,000 to the 39,107. That 39,107 also matching what's on the trustee trial balance down here. We're in balance on the GL, but we're not yet matching from our net income on the trial balance to the general ledger until we record the second half of the transaction. Cost of goods sold, the next one on the lineup. That's the last account we have thus far. So we're going to go all the way to the right to the cost of the goods that we sell. That's going to be way over here in BJ8, and this is going to be as of 123. We're in BK8 equals left to the wall. Boom, we're going to hit that 8 right out of, no, it stayed, that 8's tough. I couldn't hit it out of there even with that head of steam. There's the 23,200. And so we're at the 8,062 plus the 23,200 brings us to the 31,262. That 31,262 also matching what's on the trustee TB trial balance. We're out of balance by the 23,200 until we record the last and final transaction to inventory. Inventory being the fourth account. So let's find the inventory asset account. I found it. It's right there. It's in AH23. It's in AH23, you guys. I found it. So now we're in AI23 equals left to the wall, picking up the inventory, 23,002, bringing the balance from the 38,878 down by the 23,200 to the 15,678. That 15,678 should also match what's on the trial balance. We should be back in balance up top. This 15,678 should also be what's on the subledger for inventory all the way to the right. So all the way to the right, and it is here for inventory, so we're back in balance there. But We also need to be supporting the accounts receivable subledger. So let's see, the accounts receivable subledger, meaning who owes us the money, tracking by who owes us the money. And we're going to say that this was a new person down here, which we're going to call Eric Music. So we're just going to call him Eric Music owes us money on 123. So now I'm in BS 17. I'm serious. It's not BS 17. This is going to be all the way to the left till we hit the wall. We're going to pick up that accounts receivable again. The A to the R. That's what we want. 30,450. Enter. So there we now Eric Music owes us money. And up top, we're back in the balance. Back in the balance again. 38,672 for all of the customers. That 38,672 matching what is on the trusty trial balance and the GL. Whew! I know what you're thinking. That was great. Let's do it again. Okay, let's do it again, people. So we're gonna, but we need more space because there's not enough space down here. So I'm gonna add some columns, some more general journal columns by going from P to S, copy, put our cursor in the skinny, right click, and we're going to insert copied cells like so. I'm then going to copy the skinny to the left. Just going to copy that, and I'm going to put that skinny right here and paste the insert items there. So we got another skinny, and then I'm going to format paint so I don't have these indentations on down below. By hitting the format painter, I'm going to paint it all the way down so we just got a nice blue, just like a blue fence. We're just painting it like just a blue fence. And then I'll delete all the stuff that's inside it. We don't need that stuff. And then we'll go ahead and hide. I'm just going to hide this whole thing over here now. So we're just working on what we're working on so we could focus like a beam of laser on the thing that we're important right now. Hide this stuff. And then we're going to say this is on 124, same transaction, same thing. So we're selling inventory. This is the transaction behind an invoice. We're going to say accounts receivable is going to go up. Sales taxes payable is going to go up. And then we're going to have sales is going to go up. That's being our revenue account. Then I'm going to make another account that's kind of like the same stuff, but it's kind of thought of separately in our head. The inventory is going to go down. But let's start it with the cost of goods sold is going to go up, the expense, and the inventory is going to go down. That's what happens. These are the accounts that are impacted by the invoice. Home tab, alignment, indent, and indent. So now we want to think about the stuff that we're selling. What kind of stuff are we selling? I'll tell you the stuff we're selling. We're going to go all the way to the right to find the stuff. All the way over here to the right to find the stuff. And we're in the subledger with the inventory items, and we're going to sell one of these GSBs again, a bunch of them. Now we're going to have a problem. We're actually going to oversell more units than we have at this point, which is going to be an inventory kind of problem for us. But so bear with me. It's kind of a bit of an issue with it, but we're going to match this out and say that we have a problem with regards to our stocking in some way, which we might then have to check out with an inventory count at a future point and so on if this was to happen basically in practice. So bear with me on that. We're going to say that we're going to have the sale here of 10 units, and these units cost the $598, and then we multiply the 10 times the $598. And so now we're going to say that what's going to happen to ending inventory, pulling this over into the ending inventory. We had 9 units and we sold 10, meaning we have a negative unit. So that would be an indication that there's a problem typically in the inventory, and we'd have to basically go back and kind of figure that out. But we're going to roll with it at this point in time. So we actually have this negative unit at this time, and we're going to say -1 times the 598 gives us that -598. So then we're going to post this out to the ledger. We're going to be out of balance by that 5980 on our subledge at this point. So we're out of balance. Where is that? It's right there. There it is. We're out of balance right there. Going to go all the way to the left now and record this on out. Accounts receivable, we're going to start at the inventory, or let's start at the cost of goods sold. I'm going to do this with a formula so you can see where the number is coming from. You don't really have to use a formula here, but it gives you that added level of detail. So we'll go on, I'll go ahead and do that. So we have the added detail level, leveling up on the detail. And then we're going to say the inventory is going to be the credit. Now remember again, the sales price is not specifically tied to that necessarily, but you might have a standard kind of markup. So we're going to say that the sales price is going to be just simply, I'm going to type in the negative 7770 on the sales price. And then we're going to have the sales tax, which is going to be 5%. We're saying it's going to be this times 0.05, the generic 0.05 for the sales tax. And then we'll take the negative sum, the plug formula. How much are people going to have to pay us? They're going to have to pay us the negative sum or the 8159. Let's post it out, trying to do it just with the keyboard here. Using the keyboard, we're going to say no mouse whatsoever. No, we don't need that stupid mouse. I'm just going to unplug that thing here. We're going to go into the receivable, F2 plus F2, picking up that 8159. We're up to 46830. Sales tax is the next one. That's going to be down here in the liability area. We're in AB14, F2 plus F2. Scrolling on up to that 389. So now we're up to that 2,344. Next, we're going to be going to the sales. That's in our income items. We're in AB17, F2 plus F2. Picking up the sales item at the 7770. We're up to the 46,877. That's going to have an impact on the net income as well. We're back in balance, but we still need to record the second half of this whole thing. The part that wouldn't be on the invoice, but would be driven by the invoice in software cost of goods sold. That's going to be the expense side of stuff. So this is going to be F2 plus F2 and the cost of the goods that are sold. This 5980. So we're up to the 37,242 there. And then finally, I was about to go to the mouse, but no, we're not doing the mouse right now. This is inventory AB7 F2 plus F2. And there we got the 5980, bringing it down to the 9698, back in balance down below. This is the impact on the net income, starting net income from the two transactions. This is the impact with regards to the increase in the sale and the increase in the cost of goods sold. Difference between the two is the impact on the net income, and there's our ending net income. Let's post it to the GL now. So now we got the accounts receivable here. That's the third account on the trial balance, therefore a third account on the GL as well. This is on 124. We're in cell AN11. We're going to say equals and scroll on over to the wall, picking up that 8159 and enter, bringing the balance up from 838,672 by the 8159 to the 46,830. We're out of balance by that same amount, and the accounts receivable has that 46,830 in it. We're looking at the sales tax. That's going to be down here. Last liability account, assets, then liabilities. Last one, sales tax payable, 124. We are in cell BD9. Equals left to the wall. Picking up the sales tax payable, the 389. We've got the 1955 up by the 389 and the credit direction to the 2344 sales tax payable. Also on the trustee trial balance. We're out of balance on the GL till we record the next transaction. Sales is the first income statement account on the trial balance. Same thing on the trustee GL or the GL. The trial balance is the trustee one. But I trust the GL too, even though it's just longer. 124, we're on BL9, equals left to the wall till we hit that 9. Boom, the 9's been hit. And then we're going to get to that 5980, enter. So hold on a second. Something went wrong there. Sales should always be going up. Let's do it again. Left to the wall. And we should be picking up the sales, which is that 7770, bringing it up from the 39,107 up by the 7770 to the 46,877. That 46,877 also on the trustee TB back in balance up top, although we don't tie out our general ledger to the trial balance yet until we record the other side, the side which would not be on the invoice because we don't want to show it to the customers, but driven by the invoice on a perpetual inventory system. So now we got the cost of goods sold. That's like the second or the last income statement account. So we're going to go all the way to the right till we find those. Assets in green, liabilities in orange, equity in blue, and then the other blue with the white lettering for the income statement. Cost of goods sold is on the 224. We're in BP 9. Left to the wall till we hit that 9. 9. Fist bumping the 9. And then we're going to say 5980. So the 31262 up by the 5980, taking us to the 37242. 37242 also on the trusty TB. And we see we're out of balance now by the 5980 until we record finally and lastly the inventory. So inventory is the fourth account on the trial balance, therefore also the fourth account on the general ledger, which is also trusty but doesn't sound as cool to say as the trusty TB trial balance. So we're going to say we're an AN24 equals less to the wall. We're picking up then the inventory 5980. So now we're at the 15678. That's what we were at. But now we decreased it by the 5980 to the 9698. That 9698 also on the trusty TB. Back in balance here. Back in balance up there. Both the green zeros. All the zeros are green like they should be. Now let's check the inventory, and then we're also going to have to add the information to the accounts receivable, tracking who owes us the money in the subledger. Let's just double check the inventory first. Are we back in balance? Yeah, we're at the 9698 on the inventory. That ties out to the trusty TB. We got the green 0 for the double check on that one. And then we also want to add, we got to add a new, we thought we were done with the tough stuff, but we got one. It's not hard, it's not tough, but we got to add another column of clients here, of customers, to add this new customer, which is going to be Music Stuff Store. So I'm going to add another group here. So I'm going to put my cursor on the skinny to the BY, Control C. I'm going to put that right in the other skinny right here and right click on it and insert the copied cells. Going to delete the names, delete the beginning balances and the activity. And so I don't need this name. I'm going to leave that one down there even though there's nothing in it yet. And then we're going to say that our new customer is Music Stuff Store. What a generic name. What kind of person would make up a generic name like that? I never want to meet him. I'll tell you that. CB5 is going to be equal to, we're going to go all the way left to the wall. And then we're going to go down to, or up to the accounts receivable, the 8159. There we have it. I need to add it then to my checking account, my check numbers up top. Not like my checking account like cash, but the account that checks my numbers is going to be this plus this one, even though I don't have a customer down here yet, but I'm going to add one most likely at some point, so I'll just keep that one there. So there's the 4683, the green 0 indicating it ties out to the trusty TB. Let's double check it though, going all the way to the left. Does it check out? Let's check it out to see if it checks out. There's the 46830. So it looks good to me, I believe. I think we got everything that we need to have. This is where we stand at this point in time. You can check your numbers if you're following along, and we'll do the next one next time.